Right, welcome back everyone. So today we're doing a proper deep dive on something I genuinely believe is one of the most important conversations you can have when it comes to your finances, and that is the protection gap. Now I know what you're thinking, Patrick, what on earth is the protection gap? Well, stick with me because by the end of this video, I promise you will look at your own situation differently. And if you already have some protection in place, you might well discover that you're not quite as covered as you think you are. Think of it a bit like Bilbo Baggins thinking he's ready to face Smaug with nothing but a walking stick. You might feel like you've got something in place, but when the moment actually arrives, it turns out you were dramatically underprepared. So let's get into it. The protection gap is basically the difference between the financial protection you actually have in place and the financial protection you actually need. Now, that gap can exist in a few different ways. You might have no cover at all. That's the most obvious version. But the sneaky version, the one that catches people completely off guard, is when you think you're covered, but the cover you have isn't actually enough to protect you properly if something goes wrong. Let me give you the scale of the problem in the UK right now, because these numbers are genuinely jaw-dropping. According to the FCA's own Financial Life Survey, published in 24 and 25, 58% of adults in the UK do not hold any pure protection product at all. Not a life insurance policy, not critical illness cover, not income protection, nothing. The Financial Conduct Authority themselves flagged this as a major concern and have launched a full competition review of the protection market, specifically because the gap is so large. So over half the adults in the country right now have nothing in place if something goes wrong. And remember, this is the regulator saying this. This isn't a scare tactic from me to sell you something. These are genuine official figures. But here's the part that really gets me. Of the people who do have something, many of them are still significantly underinsured. Hargreaves Lansdown published research showing that 14 million UK households with at least one dependent, nearly 6 in 10, that's 57%, do not have enough life cover in place. The average life insurance gap for those households was £89,800. For homeowners with children, it rose to over £194,000. So you've got people out there who have a policy, they feel like they've done the right thing, but the level of cover they have wouldn't actually sustain their family if something happened. Now, before I go further, I want to quickly lay out the three main types of personal protection because they all do different things and you genuinely need to understand all three. Number one is life insurance. This pays a lump sum to your family when you die. For most people, this means clearing the mortgage and making sure their family can keep a roof over their heads. This is the one most people have heard of, and it's the one with the highest take-up rate in the UK. Although, as we've just seen, even that isn't always at the right level. Now, number two is critical illness cover. This pays you a tax-free lump sum if you're diagnosed with a serious medical condition. Things like cancer, heart attack, stroke, multiple sclerosis. This pays out while you're still alive, and it's yours to spend however you choose. Clear the mortgage, fund treatment, adapt your home, take time off to recover properly. And then number three is income protection. This replaces a portion of your income, typically up to 70%, paid monthly if you're unable to work due to illness or injury. Unlike critical illness cover, it's not restricted to a specific list of conditions. If you genuinely cannot work, it pays out until you return to work, or in many cases, until your retirement age. Now, here's the thing. Most people in the UK have heard of life insurance. They kind of know what critical illness cover is, but income protection? According to research by Shepherd's Friendly published in 2024, only 14% of British adults have income protection in place. Only 14%. That means that 86% of the country is walking around with no income replacement if they get seriously ill and can't work. And the FCA's own data shows that that figure is even lower in some demographics. Just 6.2% of UK adults had income protection in 2024. Now think about that, 6%. That is a staggering gap. So now let's take a look at the brutal truth about the current state safety net. And I need to talk about this because it's one of the biggest reasons people don't sort their protection out. They assume the state will look after them. They assume their employer will cover them. And the honest truth is, for most people, neither of those assumptions holds up under scrutiny. Let's start with statutory sick pay. If you're employed and you get ill and can't work, after the first 3 qualifying days, your employer is legally required to pay you statutory sick pay, or SSP. As of April 2025, the SSP rate is £118.75 per week. That's it. That's the legal minimum. and it only runs for a maximum of 28 weeks, just under 7 months. Now, let me put that into perspective. The average UK monthly wage is around £2,900 a month. SSP works out at roughly £515 a month. That means if you're relying on SSP, you're suddenly living on about 18% of what you were earning before. Not 50%, 60%, or 70%. Not even a third, 18%. And your mortgage doesn't care. Your council tax doesn't care. Your car finance doesn't care. Your food shopping doesn't care. All of those bills keep coming in as normal. Now, some employers do offer better sick pay schemes, and full credit to them for it. But most of those occupational sick pay schemes only run for a few months at full pay before they drop to half pay, and eventually down to SSP or nothing at all. So even if you have got a generous employer, after 3 or 4 months, you're likely to be heading into SSP territory. And after 22 weeks of SSP, it stops completely. You then have to look at universal credit or employment support allowance, both of which are means tested, which means if your partner works or if you have savings above a certain level, you may get very little or potentially nothing at all. So the idea that the state is a proper safety net for long-term illness, I'm afraid largely a myth for most working people in the UK. So let's take a look at the odds, because they really are not in your favour. Let me hit you with some of the real statistics now, because I think this is where it really sinks in. According to Royal London's research, men are around 6 times more likely to be unable to work due to illness or injury during their working life than they are to die. And women, they're around 12 times more likely to be unable to work than they are to die. So most of us are far more likely to suffer a period of serious illness that stops us working than we are to die early. Yet if you look at the protection we have in place, the vast majority have life insurance. And almost nobody has income protection. We're insuring against the least likely outcome and leaving the more likely one completely unprotected. It is, as Blackadder might say, a plan so cunning you could put a tail on it and call it a weasel. Except the consequences are not funny at all. According to LV's data from 2024, your chance of being off work for 2 months or more before retirement is as high as 1 in 5. 1 in 5. And according to the Mintel Income Protection Report, 59% of UK workers expect to face financial hardship within 6 months of being unable to work due to illness. A further 15% have absolutely no idea how long they could manage. Only a tiny fraction are genuinely financially prepared for that scenario. And Cancer Research UK tells us that 1 in 2 people in the UK will develop cancer at some point in their lifetime. 1 in 2. And the average age for a critical illness claim is just 47. 47 years old, not 67. Not in retirement, 47. Right in the middle of most people's most financially stretched years, when mortgages are at their biggest and families are at their most dependent on that income. So why do so many people have nothing in place? Well, this is where I have a lot of empathy, because I understand it completely. In my conversations with clients across the East Midlands and the UK, I hear the same things come up again and again when people explain why they haven't sorted their protection out. So let me take each one and be really straight with you about it. Reason number 1, I can't afford it. This is by far the most common one, and the cost of living crisis has absolutely made it more of a pressing concern for more people. But the honest truth is, most people massively overestimate what protection costs. A healthy 30-year-old non-smoker can get a decent income protection policy for the cost of a couple of takeaways a month. Life insurance at that age is often just a few pounds a week. The question isn't really can you afford it, the question is can you afford not to have it? And here's a thought. If your income stopped tomorrow, how long would you actually last? According to research, 51% of Brits, that's roughly 27 million people, would not last more than 1 month living off their savings. Around a quarter of people have no savings at all. So for most people, the answer, can you cope without your income, is a very definitive no. Which means the question of whether you can afford protection is really a question of whether you can afford the risk of having nothing. Now, reason number 2, my employer will cover me. As we've just talked about, employer sick pay is short-term and limited. Even the most generous employer sick pay schemes typically run for 6 months at most, and then they drop down to SSP or stop altogether. Very few employers offer any form of long-term protection for their staff. And if you're self-employed, it's even worse. You have no SSP at all. Zero. Diddly squat. Zilch. If you can't work, you don't earn. Full stop. Now, the third reason we hear, it won't happen to me. And I hear this one a lot, and I completely understand it. When you're fit and healthy and your life is ticking along nicely, the idea you might be diagnosed with cancer or have a heart attack just doesn't feel real. I myself spent several years recovering from serious illness, and the statistics don't lie. 1 in 2 cancer diagnoses. Average critical illness claim age of 47. 1 in 5 chance of being off work for 2 months or more before retirement. These things do happen, and they happen to completely ordinary people. People just like the ones I speak to every day. People like you. And reason number 4, I've got some life insurance, so I'm sorted. And this is the one that concerns me the most because it creates a false sense of security. Life insurance is brilliant, and you absolutely should have it if you have a mortgage or dependents. But as I said earlier, life insurance only pays out when you die. It does nothing for you during a serious illness. And statistically, you are far more likely to be seriously ill at some point than you are to die during your working life. So life insurance alone is not a complete protection plan. Now, I want to spend a moment specifically on something we call the homeowner blind spot, because it's something we see constantly in my work as a mortgage and protection advisor. People take out a mortgage, they get life insurance to cover the mortgage because lenders or advisors recommend it, and quite rightly so. And they feel like they've done the responsible thing. Job done, box ticked. But here's what Royal London found in their research. 8 in 10 homeowners with a mortgage do not have income protection. 2/3 of homeowners have no critical illness cover. But the majority do have life insurance. So the mortgage is protected if they die. But if they have cancer or have a heart attack or develop MS and they survive, which given modern medicine is the most likely outcome, that mortgage still needs paying. Those household bills still need paying. And they have nothing in place for that scenario. The house is only safe if you die. That is not a complete plan. And I do not want to be the person who has to call a client after diagnosis and tell them their mortgage isn't protected. I would much rather have this conversation now before anything happens, so that if the worst does happen, they're properly looked after. And I also want to mention renters specifically because this group is often completely overlooked when it comes to protection. And the situation for them is actually even more precarious. Royal London's research found that less than 1/3 of renters have any life cover, and just 6% of renters have income protection. 6%. Think about it, 6%. Now, some people might think that renters don't need protection in the same way that homeowners do, because they don't have a mortgage to protect. But that completely misses the point. If you're renting and you can't work, your rent still has to be paid. Your energy bills still come in, your food still costs money. The financial consequences of being unable to work are just as devastating for a renter as they are for a homeowner. Perhaps even more so, because renters have less in the way of savings and assets to fall back on. So I want to flip this around now and show you the other side of the story, because I think it's really important to understand just how much protection cover actually pays out in the real world. The Association of British Insurers, the ABI, published their claims data for 2024. And the numbers are genuinely extraordinary. In 2024, UK protection insurers paid out a record £8 billion in claims. That's £8 billion. And that works out at roughly £22 million every single day being paid to people dealing with serious illness, injury or bereavement. Of that, £1.3 billion was paid in critical illness claims alone. The average critical illness payout was £67,600, and the proportion of claims that were paid has remained at or above 97.9% for the last decade. So the idea that insurers just look for excuses not to pay out simply doesn't hold up when you look at the actual data. Over at Royal London specifically in 2024, they paid out over £751 million in protection claims. Their critical illness payout rate was 89.7%, with the most common reasons for claims being cancer at 63.8%, heart attack at 9.8% and stroke at 8.7%. Legal & General paid out £303 million in critical illness claims alone in 2024. These are real, life-changing sums of money being paid to real people at the worst moments of their lives. And the only reason those people received that money was because at some point someone sat down and helped them get the right cover in place. So what does proper protection actually look like? Let's bring it all together, because I don't want to leave you with just a list of scary statistics. I want you to understand what a proper, well-rounded protection plan actually looks like. The starting point is always to understand what you are trying to protect. For most people, the things that matter most are the mortgage or rent. If you couldn't work or if you died, would those payments still be covered? Your income, if you're off work for 6 months, a year, 2 years, could you maintain your lifestyle, your financial commitments? And then for your family's financial security, if the worst happened, would your partner and children be okay? Once you understand that, you're protecting. You can start to build a plan that covers all three. And for most people, that means thinking about a combination of life insurance, critical illness cover, and income protection insurance. Now, not everyone needs the same thing in the same amounts. That's exactly why working with an advisor like me matters. I look at your specific situation, your mortgage, your income, your family, your existing employer benefits, your savings, and I build a picture of where the gaps are and what makes sense for you. And the added value benefits that come with modern protection policies are often overlooked too. Many providers now include things like 24/7 virtual GP access, mental health support, physiotherapy services, and nurse support lines as standard with their policies. Royal London's Helping Hand service, for example, is available from day one of your policy, no claim required. And in 2024, over 5,000 customers registered to use it. That's a genuine, tangible value above and beyond the financial payout. So I want to end on something that I think gets missed in almost every conversation about protection. And that's the emotional and psychological impact of being financially vulnerable during a serious illness. When someone gets a cancer diagnosis or has a heart attack or receives any serious medical news, the last thing that person should be worrying about is how are they going to pay the mortgage next month, or whether they can afford the energy bills while they're going through treatment. That type of financial stress on top of a health crisis is genuinely devastating. I've spoken to people who have been through it. I've been through it myself. And the ones who had the right protection in place have been able to focus entirely on their recovery, on their family, on getting well. The ones who didn't have cover in place spent their recovery worrying about money. And that's the difference protection makes. And that's why this conversation matters so much to me. If anything in this video has made you think, actually, I'm not sure I'm as protected as I should be, then that's great. Because awareness is the first step. And the next step is simple. Let's have a conversation. It doesn't cost you anything to have a chat with me. I'll look at your situation, talk through what you've already got in place, if anything, and help you understand where the gaps are and what it would cost you to close them. You might be surprised at how affordable proper protection actually is when it's set up correctly. And you'll know that whatever life decides to throw at you, your mortgage, your income, and your family are properly looked after. Because here's the thing, none of us can predict what's coming, but we can absolutely prepare for it. And I'd rather have this conversation with you today than have a very different, much harder conversation later down the line. Hit the links in my bio, give me a call, drop me a message. I'm here and I'm happy to help. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Drop me a like and a follow for more. Hit the links in my bio to get in touch. I'll speak to you soon. Bye-bye.